There's been a decline in foreclosure activity, and our refinances are on the rise. This is John Buckley. Welcome to the Register's Report. This is Plymouth County's report for the month of September on real estate activity within the 27 communities of Plymouth County. The Registry of Deeds is the location where all lien records are recorded. We have 3 locations, one in Plymouth, our main office, at 50 Oberry Street, our office at 155 West Elm Street in Brockton, and an office on Hingham Street in Rockland in the AAA Plaza. For the month of September, we did see a number of deeds recorded, 649 deeds recorded, compared to 716 recorded in August. We're starting a typical decline in the seasons. We are up 2% from the number of deeds recorded last September. However, our mortgages that were recorded went up significantly. People are taking advantage of the low interest rates in refinancing. There are guests on my show in the second segment from the mortgage community that'll talk a little bit about what's going on in the refinance market and how you can take advantage of these low rates. However, we are down in terms of the number of mortgages from last year. There are certainly some lending practices that have changed over the last year. And again, in the second segment, you'll hear from the people that are involved in it what's been going on in that marketplace. The number of foreclosures that were recorded in the month of September were surprisingly low. There have been a number of experts that have been predicting that all of a sudden we're going to have this huge burst in foreclosures, and it just didn't happen. There were 77 foreclosure deeds recorded in September, compared to 130 recorded in August, and they're down 33% from 115 foreclosure deeds last year at this time. The number of foreclosure notices likewise has dropped significantly. There were 86 foreclosure notices recorded in the month of September, down significantly from the 191 recorded in August, and down 80% from the last year at this time in the month of September. And basically, it's a transitional issue right now. There certainly are a lot of national lenders still moving forward on foreclosure, but there have been a number of issues that have held them up, including some recent court decisions and the issue of robo-signing that many of the national lenders were doing. So the foreclosure issue remains to be resolved. You will see on the screen during this conversation a listing of foreclosure deeds and notices by all 27 communities in Plymouth County. Welcome back to the Register's Report. My name is John Buckley. I'm the Register of Deeds for Plymouth County. And in this segment of the Register's Report, we usually try to do something educational in nature. And the topic of today's show is about what's going on in the mortgage market. Over the month of September, as I talked about previously, we recorded a significant amount of mortgages, 1,878 mortgages, compared to 1,612 mortgages in August. Everyone knows the rates are very low, but I brought in 3 experts in the mortgage business to talk to us today. Steve Amico on the far end here. Steve, welcome. Vice President of Residential Lending for Situate Federal Savings Bank. Brian Connor, Comer, I'm sorry, Brian. President of Advanced Mortgage Services, and Stacy Jordan, Vice President of Advanced Mortgage Services. Welcome.
Thanks for inviting us.
Thanks for having us.
So I think the mortgage market and what's going on out there for the general public across Plymouth County is certainly at an interesting time right now. Rates are at historically low rates, and there are many people taking advantage of it. But why don't we start with everyone just kind of introducing themselves a little bit and your background in the mortgage industry, starting with you, Steve.
Well, I've been in the mortgage industry for 22 years now. I just was talking to Stacy out there and saying that I'm now starting to see my customers' kids come to me. It's making you feel old. But I've been with Situate Federal for 15 years. We've seen the highs and the lows, and now we're seeing a whole different side of the mortgage market with values not coming in and credits going up and down, and the mortgage rates actually going up and down on a daily basis and sometimes hourly. So
Right. Stacy, why don't you tell us a little about your background?
I've been in the mortgage business for 13 years and primarily focusing in residential lending. I've been with Advanced Mortgage Services for going on 6 years now. And when I got in the business, I remember interest rates were creeping up mid-8s, and I think they actually reached 9%. They've gone down. They've gone down ever since and have not gone back up. So for me, it's been an interesting course of the past 13 years. I think the biggest misconception I'm finding right now is in new home purchases, the amount of down payment that you need. You don't need as much money down as buyers tend to think out there. The media has portrayed that very negatively. But
And Brian?
My name's Brian Comer. I've actually been in the mortgage industry now for about 17 years. I think Stacy and I pretty much the same amount of time, I would say, somewhere in that range, because I was dealing with kind of a parallel history with rates creeping into the 8s and 9s when I first got into the industry. We own our own business, and we've been Advanced Mortgage Services has been in place for about 7 years now.
Yeah, I think there is a perception out there in the marketplace that it's more difficult to get a mortgage than it was in the past, based upon changes in federal legislation, changes in practices. Starting with you, Steve, what would you say are the big differences over the last 5 years? I mean, 5 years would cover the financial meltdown we had beginning in 2008 forward.
Well, Situate Federal did things a little bit differently. We're a small community bank, and we never really got involved in any of the no doc loans or limited doc loans. We really haven't changed our underwriting for 15 years that I know that I've been there. We've required all the information to be, right up front. Tax returns, bank statements, pay stubs, all of that. The changes that I've seen over the last 5 years is values. We've had a lot of customers who have very good credit, stable employment, and the problems that we're having right now is their values of their homes are coming in lower. It really hasn't changed. Mortgages have still been available. Mortgages have been available all throughout this crisis time. So I think, again, it's the media saying that mortgages are tougher to get. They just they require more documentation now. And, you have to fit, that square peg has to fit into that square hole now versus, trying to force a square peg into a round hole.
Yeah, my last month's show, we had a couple appraisers on talking about the difficulties in their job now with the changes in the drop of values and
Absolutely.
Trying to make a mortgage work from their end.
Right. The other thing is that they're appraisers, and as you know, the appraisals changed all on September 1st, and their whole industry has changed.
So Stacy, why don't you give us an example of your typical person that comes to you, how they get there, and whether it's for purchase of a home or a refinance, what do you typically run into?
in terms of, well, your typical client looking to buy a home would come in to go through the pre-approval process. So we would start there, and through that process, we obtain income and employment information for the past few years and do a whole credit analysis, as well as obtain tax return and verify all of that income to be true. And then at that point, we feel comfortable issuing a pre-qualification or pre-approval. As far as a refinance client, the process is going to be essentially the same, but of course the intent for the loan is going to be a little different. So we're going to try to assess a value in why they're applying for that refinance. Is it to lower interest rate or to take cash out and consolidate debt? And that's the typical process that we put our clients or work with our clients on.
Great. So Brian, give us in the public an idea of what people should have with them when they start the process for information. What makes your job easier when they come in and are looking for a mortgage?
Well, first I encourage them to come in right up front, before they actually start looking at homes, because we can give them an idea on whether they can actually buy a home in this marketplace. We mentioned about 5 years. We went 5 years back to talk about the marketplace. I would probably go 8 years back, because as Steve said and Stacy said, there's money available out there to get a home loan. It's just the pendulum swung too far in both directions. It got far too easy to get a home loan. I do believe that there's a place for some of the the no-doc programs for some self-employed borrowers, or we call them asset-based programs, that they have, you know, a significant amount of assets in the bank and clearly can show they can make the payments through their assets rather than showing their income where they may be self-employed. But then they started offering these programs to your less qualified borrowers. They used to be available to self-employed 1099 employees, and then they started offering it to W-2, where there's no huge bonuses coming at the end of the year, so they shouldn't have been offering those products. But now it's just gotten a little bit too difficult as far as to get a home loan, but the money is there. The money is available to homeowners. They can put 3.5% down. There's still 100% products out there, you know, that's coming from the state and some from the federal government. So there's a lot of money out there, and it's really what product or program you fit into. And for a consumer to look at their finances first to make sure that they're qualified for one of these products and it's the right product for them, it can only happen by them coming to sit down with you know, one of the professionals that, you know, that have a license in the state of Massachusetts or work for a federally backed bank. We're licensed loan officers because we don't have depository, you know, what do they call it? I forget what they call it, non-depository banks. Steve gets his training through a federally backed bank, but you should be sitting down with a professional. And if they can provide us with their W-2s, pay stubs, outlook, not just where they're at now, but where they're going to be in the next few years, we can help put them in the right product and set them up with the right realtor as well.
Yeah. So we are seeing a big increase in refinancing. I think that's something that a lot of people are looking for. There's not as many people looking for new homes, unfortunately, right now.
Well, actually, we just got some numbers out this morning that states refinancing last week was down about 16%.
Okay.
But home purchase applications went up 8%.
Oh, great.
So, you know, we're going to continue to see that trend as the absorption rate, which is about 36 months right now, continues. It's still considered a buyer's market because of that absorption rate. So,
Very much so.
we have about 36 months or 3 years of inventory out there based on the number of sales that take place and the number of houses that are on the market. So, we're actually seeing those purchases pick up, and we're seeing more and more qualified buyers, wouldn't you guys say?
Well, I think, you know, I think your original question that Steve answered, the key to today's market is that you have to qualify for a loan.
Right.
And I know that's kind of an interesting concept, but truly, if your income is there and you have some money for reserves, or you have the potential to get gift funds to purchase a home, and you qualify from a credit standpoint, you can get a mortgage. You have to qualify, and let's face it, that's how it should have always
It's
been.
not as bad as everyone's making it out to be.
Right.
I was just
isn't.
going to say, it's not as
It
difficult
isn't.
as the media has portrayed it to
Portrayed
be.
it.
Now, maybe on the commercial side, it's a little bit more difficult. Residential side, it's not. You just have to prove that you can afford to make the monthly payments. Sometimes you have to go with your gut feeling on underwriting. I mean, I laugh with some customers who come in the past, I called it mirror underwriting. What they do, they'd stick a mirror under your nose. If they saw breath, they'd give you the loan.
Right.
And those are gone now. As Brian said, we all have to be licensed. I even have to be licensed through NMLS, which is the National Mortgage Licensing Service. And everyone has to be licensed. The bank even has to have.
Which just, I was just
MLS
saying, gives you a better quality loan officer out
Exactly.
there, I feel. But,
Right.
you know, the one thing you mentioned, which was the appraisal, Steve, which is really a very good point. The appraisals are awfully tough out there. You know, you look at a borrower, and I say go back 8 years rather than 5, because home prices have actually done very, very well in the last 10 years. If you look at a home that someone bought 10 years ago, it's almost doubled in price.
True.
Right.
You know, so if you look at over the course of the last 5 years, those are the people that are really in a little bit of trouble here. And, you know, there's all kinds of plans. There's a national refinance program going through Barbara Box's office right now that we feel will benefit not only, we hope, but we feel will benefit, you know, more so than any other program that's been provided, where if you're already with a Fannie Mae or Freddie Mac lender, and you have your Fannie Mae, Freddie Mac contract number, and you're making your payments, your credit is in good shape, and you have good income, what they'll go ahead and do is, with the Fannie Mae contract number, not do an appraisal on your property. because they're already on the hook for that value, and will allow you to do the refinance, which will help the economy, will help the consumers, and will help people try to stay in their homes rather than add more inventory to the marketplace.
And that is the program that we were waiting for with bated breath when Obama came out with his home stimulus package, and that was one of the aspects of it that we were most excited about, that unfortunately we have not had the ability to, help consumers, but talk about making a difference out there in people's lives.
Some of the other programs that they had out, and a lot of the things that they told people to do, they told people the only way you're going to get help is if you don't make your mortgage payments.
That's a hard one, yeah.
And, some of these places that did that, now it puts those people in a very unenviable position, because now they can't refinance because now they have delinquencies on their mortgages. And that's what happened in the past.
Or currently is still taking place.
Still taking place,
Right.
exactly.
And quite frankly, sorry to
No, go
interrupt,
ahead.
but those same people, though, I would say the majority of them have been successful at modifications because they have stopped making mortgage payments, but it's only perpetuated the problem, hasn't solved anything.
It's kind of a negative incentive.
It's absolutely.
It is a negative
Right.
incentive. What we found is that it was helping the 1 out of every 10 homeowners, the ones that weren't making their payments, but the 9 out of every 10 people that were making their payments are actually paying for this program and can't be helped.
Right.
Correct.
And we feel not only will help the economy, because if you lower the interest rates, obviously the government's trying to lower interest rates. If you can lower interest rates on all these homeowners, 1 out of every 4 transactions, refi transactions, I don't know if that's your statistic, we cannot refinance them due to value.
Right.
And in most of the cases, I would say it wasn't even their fault. It's someone in their neighborhood ended up getting a mortgage they shouldn't have gone, doing a short sale or foreclosure, bringing the value of their home down, and precluded them from being able to do a refinance.
I do have to say, this morning I was very pleased with, I got an appraisal in for a customer who bought a house a little less than a year ago, and they're refinancing with us right now. And their house actually came in higher than what they paid for it a year ago. So that's it's not a huge amount, but it's an encouraging sign that it's worth more.
Very believable,
than it
because
was.
I think that a lot of people are selling their homes at a significantly lower price than it needs to be, whether it's a short sale or a foreclosure. These banks are taking bigger hits needlessly because they aren't working appropriately through the process. So they're bringing their values down artificially. They don't need to do that.
Well, that's a great discussion on underwater mortgages. In one of the parts of the show today, I talk about that program that actually both senators from Massachusetts, Scott Brown and John Kerry, have signed on to a letter urging them to move forward with it quickly. And it would be great for everybody in the industry. It
Without a doubt.
stabilizes families by paying a lower rate.
Is this Barbara Boxer's bill?
It's a Barbara Boxer
fantastic.
bill in a letter that they sent out. 17
right.
United States senators sent a letter to the agencies involved.
Well, they're giving there's 3 components of that. I don't know if you know. It retools HARP.
Right.
It removes or...
Why don't you describe HARP?
Oh, HARP is, well, do you want to do, we don't
No,
do
go
any
right
HARP,
ahead.
we don't do
We
any
don't
HARP
either.
programs. I'd rather not speak to it, only
Okay.
because I don't know it well
Sure.
enough. HARP can only be done by the institution that's holding the mortgage.
Okay.
And essentially, you have to qualify for a government program, which is HARP, Homeowner Affordability Protection.
Protection.
Yeah, and what that program does, that's the one that we're talking has so many challenges to get through. And one of the challenges, they ask the homeowner to be 3 months delinquent on their mortgage before they can help
Which
them.
hurts the
is-
homeowner from refinancing
Yeah.
later on. It's not worth it.
And but causes foreclosure deeds to take place and whatever over at the registry. But the second component, which I think is great, is the loan level adjustments, lower credit scores, LTV issues that are precluding people from doing refinances. It either reduces those or, quite frankly, might actually eliminate them. And then the second portion is to allow a homeowner that is current on their mortgage, they own a Fannie Mae, Freddie Mac loan, or have been given a Fannie Mae and Freddie Mac loan, and they're meeting all their obligations. It's just they can't refinance. These people can save anywhere between $200-500 a month. When you guys say somewhere in that range,
I think we all have a great example. I know as of last week I had one client that was subject to change, saving $530 a month. And it was only because the home appraisal came in too low that we were unable to fulfill that
It's
refinance.
terrible. It's terrible.
It's heartbreaking. That's it makes a huge difference in that family's life.
I know a lot of people are really urging all of our congressmen. Congressman Keating was in our office yesterday on an event. We talked to him about trying to push it along. And I think the Massachusetts delegation is really behind it. And I hope the Obama administration can move it along quicker.
Exactly.
It seems to be a decision that they can make to modify how.
And what it's causing is, you see the anger on Wall Street, and you see what it's causing is an anger because, you go and you do the right thing. You pre-qualify for a loan, you get a pre-approval, you go out and buy a home that you can afford based upon your W-2 income or self-employed. Well, some consumers have been forced to get less pay, whether it's, let's say, a state trooper who no longer can get overtime, or bonuses have been cut back, or no bonuses at all, and it's affecting their lives. So one of the immediate things that they can have that will help them is to do a refinance.
Sure.
And this can, act immediately, save them $300 to $500 a month at a lower interest rate, and they are angry because they see their neighbors get this
Being
HARP
able to
program
refinance.
when they're in a home that they never should have been in the first place.
Right.
Well, I appreciate you coming on the show. We're coming to the end of our time, and there was one last question I just wanted to throw out. What are the differences between financing a home that is purchased from a foreclosure deed, from a foreclosure lender or something, taking back the property? Any differences in terms of hoops you have to jump through or anything?
Well, fortunately, we didn't have any foreclosures. We've had one foreclosure throughout this
I'm
whole
saying
thing.
if a person comes in that's buying a foreclosed upon home,
When it goes to the attorney does the title work on it, and you hope that the attorney has done, and I know our attorneys have done all their due diligence on there, and you hope that the foreclosure deed is correct. You don't know.
but as far as your own internal process?
No, internal processes essentially
Essentially
are
the
still
same.
going to
Yeah.
remain the same.
Do the same thing.
Want to add anything?
I think
We'll wrap it up, and we could talk all day. There's a lot
I know,
going on in the
absolutely.
mortgage
Essentially,
market.
I actually think there are programs for it. Meaning when you're buying a foreclosed home, sometimes there's utilities that aren't working, whether it's the
Right.
heating system or kitchen, whatever. And we offer products, 2 or 3K programs, things of that nature, to do renovations to make sure they can purchase these properties in the condition they're in.
I think when you identify that it's a foreclosure, there are certain things that we do a little differently internally, but that comes down to working with someone that's been in the business for a long time and knows the questions to ask and prepare the client appropriately.
Great.
As long as
Thanks
you
for
do the
inviting us.
proper
Correct.
title search,
Comes
and you
down to
have the title
working-
insurance, and
Right, working with the right attorney as well,
Right.
and that makes a big difference.
Right.
Well, thank you very much. We're running out of time on this
Okay.
segment.
Thank you.
But I think you've given the general public here a lot of information. As I told you before, this goes around to about 24 or 25 communities throughout Plymouth County. We try to do some educational piece to this, which obviously you guys have done a great job today.
Absolutely.
Well, thank you so
Thank you
much.
very
Thank you for
much.
having us.
Appreciate it.
Welcome back to the Register's Report. In this segment, we try to do a little lighter version of some of the things going on in Plymouth County. But before I get to that, I want to thank Steve Amico and Brian Comer and Stacy Jordan, who were our guests on our last segment. What is happening in the mortgage market is very important to people, and I just advise anyone to try to take advantage of these low rates and put money in your pocket. At least make the effort and try to get out there and see what your appraisal level would be of your home, and see if there's any particular products that your favorite mortgage lender could get for you. It's well worth the effort. A couple news flashes affecting the Plymouth County real estate market. Martha Coakley was here in Plymouth County recently, and she talked a little bit about her efforts to try to get the Attorney General's Association across the county to come to some kind of an agreement with national lenders that will take care of the issues of robo-signing and the failure to file assignments. There was a recent pass of a law in Nevada, one of the states hardest hit, that actually requires separate affidavits before they can go to a foreclosure deed that makes sure that everything has been properly recorded before they can take back somebody's property. It's something that we're following. The Security and Exchange Commission is starting legal action against Standard & Poor for some of the rating issues when they rated some of these crazy certified debt obligations that have gotten us into this housing mess at a high level. The various reports from across the country of incredibly low interest rates. A 30-year loan has been bouncing it around at about 4%. Again, something you should try to take advantage of. And some really good news that I think is moving forward in Washington. a letter signed by 17 United States senators, including Senator Scott Brown and Senator John Kerry, went forward to President Obama and his federal agencies to try to let people whose homes are underwater refinance. We do talk about a couple notable land records that you'll see come up on the screen. In this month's show, we talk about the ownership of land in Middleborough by Mr. and Mrs. Tom Thumb. They were a significant part of Barnum and Bailey's circus. Mrs. Thumb, Lavernia Bump, was actually born in Middleborough, and then Tom Thumb, after marriage, ended up moving to Middleborough. There's a lot of historical Tom Thumb information at the Middleborough Historical Society. We also want to talk about, and show on the screen, a notable land record about the Cable House in Duxbury. It's a former bank building. It was where a transatlantic cable connecting Brest, France, to the town of Duxbury was located. It was quite a story. They laid an underwater telegraph cable across the Atlantic Ocean in 1869. Go onto our website to read the story in more detail, PlymouthDeeds.org, and you will see on the screen again a copy of one of our notable records. Each month we also try to talk about something from our registry of plaque, statues, and monuments. One of the newest plaques in Plymouth County was released recently in the town of Whitman, in the town of Whitman Center, next to the site of the former Jubert's clothing store. And it's the Whitman Family Homestead, a group of volunteers in Whitman, a woman by the name of June O'Leary, who was a volunteer, brought this forward. You'll see on our screen a picture of that plaque, which tells a significant history of Plymouth County. Whitman, the area of Whitman was once part of the town of Abington. It became South Abington, and then, based upon the significant generosity of the Whitman family, including their donation of land for the Whitman Town Park, the townspeople voted to name their town the town of Whitman. I believe it's the only town in Plymouth County that has actually been named after a resident. We're researching that as we go forward. And before we close, I want to once again thank Brockton Community Access Television for their work in putting this show together. This gets distributed across Plymouth County to about 25 different communities to share our data on deeds, mortgages, foreclosures, and other interesting things affecting us in the real estate market. While the real estate market remains challenged, we work with a lot of great people all across the way, from assessors to surveyors to individuals like the mortgage individuals you saw today, and together we will eventually work our way out of it. But thank you to Aaron Thibault and the folks here at Brockton Community Access Television for the work that they do in letting us share this information with the public. Thank you once again.